Good afternoon, everybody. Welcome to Bar's Closing. My name is Jim Cagnina with NinjaTrader. It is Monday, July 25th. We're already getting toward the end of July. I know it's tough, but we still have August. We have a long way to go before we get to Labor Day. So don't get too excited. Everything is going to be just okay. First to chime in, Robin. Robin, good to see you. Special shout out to you for being the first one here. A lot of stuff to talk about today. Before we go too far, though, let's remember trading futures options on futures involves substantial risk of loss, not suitable for all traders and investors. Oftentimes in futures trading, you have a high combination of leverage and volatility. And although that could be an equation for opportunity, it's also an equation for risk. So be careful. Only fund your futures trading account with risk capital. Everybody's unique and different in this world. I get it. My personal definition of risk capital, money I can afford to lose, doesn't change my lifestyle, lengthen my retirement horizon, or overly stress me out. Stress is a big deal in life. We make bad decisions when we're under stress. So be in a good spot. Be patient. Easy on the day trade margins. You get plenty of leverage as it is with futures trading. Trading on a real-time simulated live trading account today, and micros are your friends. None of this should be construed as trade or investment advice. Any questions on that kind of stuff, I'd be happy to talk about it. I was a commodity broker, retail online commodity broker for 20 years, talking to traders all over the globe, and have seen all sorts of stuff. Just like that farmers insurance commercial. If you're here in the United States, you know what I'm talking about. If it's happened, I've seen it. So feel free to type in anything on the brokerage fund, stuff like that. As we go forward here, I'll give you my experience in the past. All right. Nasdaq, I just threw a trade idea in. I do not recommend anyone follow this trade idea. I want to see if S1 supports. It's tied up with the bottom of the second standard deviation band of the volume weighted average price indicator. But we are at the lows right now, and picking lows is not always easy. So I did it anyway a little bit before we logged in. We're going to see how that goes going forward. Alternatively, I do have a nano, what I'm going to call nano Bitcoin. I'm not going to call it. It is a nano Bitcoin trade right now. 10 contracts. We just got the point of control. I waited. We kind of got to pop back up. Point of control held, and we're selling off right now. And now that I think of it, this was a 20 handle trade. No, it wasn't. I got to get my second unit, my target here. So we never even got close to this standard deviation line here. We broke S2. My window for this opportunity isn't necessarily over yet to get out at a lower price, although we are at the end of the day here. So I'm inclined to trail a stop at this point and just let this thing ride. Again, it's a nano, so it's okay. And I'm going to be right above that S2 to trail that stop. I'm just going to go ahead and throw it in. It'll be a buy stop, and then I'm going to change it to the appropriate unit size, which is 10 in this particular case, or 1/10 of a micro. I know it gets complicated. We'll add some bigger numbers here as we go forward. I'm going to cancel that second 10 lot. We didn't get it. And we're going to be patient here, and we'll kind of take a peek at it as we get closer and closer to the end of the day. Again, I don't think we're going to get to the second standard deviation line, but we'll keep it there anyway as we go forward here. Let's take a look at some of the other markets here. Tom pointed out to me earlier today that Russell was a little while ago, actually. Russell is a little bit stronger than the other stock index futures here. We're still within the first standard deviation band right now. We're bouncing off it pretty well. It corresponds with yesterday's high as well as the bottom of the value area. So a lot of interest right there. I don't even have a fib line on here yet. And so you could argue one of two things. Either the Russell's leading or the Russell's lagging. I know that doesn't help because those are really the only two options. Or, well, there's a third option. The Russell's right in sync with everything else, but it's not. So that's my fib line right now. We're right at that 50%. Point of control is a little higher. Commodity channel index is negative and not going anywhere fast, minus 124. Moving average cross is kind of going parallel at this point, although it's hard to tell visually. Sometimes you got to do the math. And we're about a little less than 3 handles apart as we speak on that moving average cross. We'll keep an eye on this particular market as we go into the close today. Remember, it's Fed Day, right? It's more than Fed Day. It's a Fed Day Wednesday, right? So there's some anticipation going on. Relatively low start on the volume this morning. We scaled up in the classic E-mini S&P up to 1.2 million. On the micros, we're doing 1.1 million. Maybe not a lot of institutional participation today. I don't know for sure, but that's my feeling just on kind of the range and how everything's moving today. And then don't forget Thursday. We're not out of the woods on Thursday, right? Let's say we come in at 75 basis points. Everyone expects 75 basis points, or 0.75% for a hike on the Fed funds. All the other indicators are slowing up. Everything is kind of aligning for a soft landing, maybe. But then you got more economic news on Thursday. 24 hours later, less than 24 hours later, you have the GDP number for the second quarter ending in June, right? Remember that we don't know July 1st what the answer is in June for the second quarter GDP. There's some calculating to do and some reports to write and some embargoes to sit tight on, and then release it on Thursday, which is coming up Thursday. So it's going to be an interesting couple of days, Wednesday, Thursday, Friday, which means, in my opinion, Monday and Tuesday might be a little slow on the draw. Just looking at this Russell right here. I mean, we're the opening range. We're getting close to the opening range. We never traded below the opening range today. Let's go back at the Nasdaq, though, see if it's the same story, because quite frankly, I don't remember. Yeah, we traded below the opening range nonstop most of the day, with the exception of a little bit of a retracement back up above VWAP. Right now, trade idea is kind of percolating in the right direction. So we're going to do a couple of trade management maneuvers right now. It's only 3:21. We got a lot of time here. If we make new lows, I'm out. It didn't work. So I'm going to put my stop at new lows. I'm going to go ahead and since it's the end of the day, I want it to be tight, right? At the end of the day, I don't really want to carry position overnight. And since I'm long, this will be a sell stop, 2 units, since I got 2 units going right now on the position. And now I want to think about, hey, where do I want to get my first unit off? Our average prices for these 2 contracts is 278, right? 278.5. I'm going to write that down so I don't forget it. And then, which I do a lot, by the way. And we want to get one of the units off the table, I think, at this point. Or we could just say, wait, you know what? No, we'll be aggressive. Let's wait to see if we get that 23% retracement back at the end of the day, like we have in previous days. I'm inclined to say, no, let's take one of the units off, stop the break even, and just do the same strategy we've been doing in the mornings right now in the afternoon. So again, rectangle time. It's going to be tough. Here's one rectangle right at that 23.6%, right? We don't have a body of a candle in my rectangle ever since, I don't know, what is that, 2 o'clock, give or take? Second, there's not really a shelf here, right? Got lower, 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 a series of lowers. So I'm inclined to say, hey, if we start making a new high, a higher high, then for sure I want to get out on one of the units here. So I'm going to line it up here between the top of this wick, right? This red candle that closed between 3 and 310, and the top of the previous one. And I'm going to split the difference here. And I'm going to go ahead and try to get 1 unit out right there. We're going to be patient and wait to see. Then if we get that unit here, boom, stop goes to 1 unit, move it to break even, plus a tick or 2, and we're good to go. Now, this is more of a aggressive approach, right? Conservative approach would be, no, let's move our stop to break even now for both units, right? And then make that sell target a 2 lot, maybe even make it even tighter, put some money in your pocket and end it, right? But I think we're going to wait and be a little bit patient here. Because again, I think from an anticipation point of view, I want to be closer to this point of control by Wednesday, 2 o'clock in the afternoon, 12,382. This is my theory for this week. We're going to be kind of, depending on what other kind of crosswinds we face, and we do have a few of them, right? We have earnings coming out. 30% or so of the S&P earnings are coming out. I know this is the Nasdaq we're looking at, but everything, high tides lifts all boats kind of thing. If you remember that, there's going to be Nasdaq earnings too, as well. So I have that also in the back of my mind as that third component, right? Fed action, GDP, and then earnings. And I'm not even thinking yet about all the geopolitical, pitfalls that we could run into. Today, what Gazprom? They turned something off. They turned something down. They didn't turn the volume to 11. They didn't turn the volume to 11. They turned it down from, I don't know, to what level, depending on what report you read. So you see the nat gas chart. We could take a look at it if you want. It's way up. It's over 860 in price right now on that. Oh, you can see it right here on the quote board. Nat gas up almost a half, 8,653. Crazy. Decent volume too for nat gas, by the way. In any event, just kind of stay tuned here. We're going to go through all the markets for sure. We might as well stay tuned. We got a trade going here. The Bitcoin trade's looking okay. It's a nano, right? A nano. So it's let's go back to this. I mean, this is just really interesting. I'm going to keep trailing my stop. I'm going to trail it now down to an area that's just right above the contemporary candle. We'll just keep trailing it. We'll keep our eyes on it as well. Again, I only did 10 contracts. I'm still getting my feet wet here. But look at this nano volume, 66,000. That's pretty good. We've had over 100,000 already, and it's just an early launch of this particular product. The other thing that I noticed, by the way, I know I'm kind of getting sidetracked here a little bit, but that's okay. That's what we do on this show. We get sidetracked every once in a while. Not often, just sometimes. In any event, we had a lot of action pre-market Sunday night here. You can see this big sell-off in Bitcoin. And again, it's an international phenomenon. This is not just something that the guys in Chicago cooked up, right? This is not a CBOT, CME operation. This is truly a global phenomenon right here, with no necessary flags being raised for ownership, right? So it's a little different. And we have a lot of activity in this particular case last night. So, and again, we're going to keep a track on this thing, see if that's how it is always. I don't know, could be. And then we could develop some strategies at the end of the day to kind of take advantage of that phenomenon by creating smaller positions and just holding them all night and into the morning. And this is a legitimate use of this nano Bitcoin futures market. So I like it. Sorry, I'm a little bit sideways here. We're going to go back over here, and where are we at here? We still got a couple more minutes left here. I forgot to cancel this. This is all messy bowl of soup right here. All right, so while I'm cleaning up my charts, let's do this. Let's take a really quick 30-second break, and I will have clean, sparkly charts when you return.
You deserve full market transparency. You deserve the flexibility to trade on your own schedule. You deserve access to professional futures trading tools. NinjaTrader, because you deserve more. Start trading futures at NinjaTrader.com. Capture the excitement and opportunity of crypto trading in a secure and highly regulated marketplace. Meet cryptocurrency futures. Go long, go short, you decide. Start trading futures at NinjaTrader.com.
All right, I think we are back just in the nick of time here. I'm just cleaning up the Euro FX chart, but I want to take a peek at crude oil. I want to take a peek at gold. We had this trade idea from this morning. Didn't happen, right? Don't forget, don't let these things dangle. Cancel. That's called unable. We're unable to get a fill, right? So also use that order tab up here in the upper left. It shows you everything you got going on. Position tab shows you everything you got going on in the positions category as well. So keep that in mind. It's handy. Those tabs on the control panel at the top. But gold broke, right? Gold broke. S1 held. We never even got close to S1. Really kind of not so fun value area. Not so fun volume profile with a little bit of a lower level point of control here. Competing point of control. Pretty up high. We haven't seen this level all afternoon, pretty much all day. So in any event, gold I'm feeling is, and let's take a look at a daily chart now. We can. So I can just pull it over here from my other monitor. Let's open it up and let's go to the gold chart. So interesting levels here. I extended the Fibonacci retracement tool all the way across to give me a better feel for what I'm looking at here. And sure enough, we really are just tapping against this 23.6% retracement on the way up. Remember, the trend's been down. The last, a couple months. And boom, we hit a bottom here. My rectangle, I think it's a solid area of support. I'm going to give it a solid. At around, it's below 1700, it's a 1600 handle, 1693, give or take. We'll see if we retest it on the downside. It's looking like we might. I don't know for sure. Again, we'll go back to crude oil now. We have an inside and outside fib. We talked about this morning at the opening range show. Really tough, man. This is a 6 handle high to low on my descending channel. We're bouncing off to 23.6 on the bottom here. So I'm open-minded crude oil. I'm not sure really what's going on. I know it's related to nat gas. So if nat gas wasn't an issue right now, I have a feeling that this particular crude market will be driving towards $75, but it's not. and, energy is energy, and we got to be quick on our feet there. So gold is trends down right now. I don't see anything to do at the end of the day. Crude oil trend is up. I don't see anything to do at the end of the day either. I think we're right there. Never got to R1. R1 never had a chance. Really nice point of control, though. Really nice point of control at 96.21. I'd be surprised if we got there at this point, since we've already settled in this particular market. Let's take a look. Got to fix this as well. I'm bearish here, guys. I know that this chart might not look too bearish. Rectangle up here held. This rectangle, I'm going to move it down. Area. Oops. Sorry, Jim. Too fast on the mouse button. Slow that down. All right, I'm going to reposition area support, area resistance. Kind of smack dab in the middle right now for the Euro FX. I'm looking for places to sell it as a general rule in this particular market right now. So we'll wait and see how this thing kind of moves forward here. Nothing to do right here also. While we're at it, because we are in this last half, right? It's last call right now. You got 30 minutes left while regular trading hours is open to do something, right? To kind of move it. We opened up lower. The opening bar here last night, Sunday. Look at where my crosshairs is, all the way at 1800 to 1808, right? 6 to 610 bar. Boom. We had a pretty big sell-off here in bonds. It's about 10 ticks. It's not small. And then we went sideways and we gradually kind of settled down, creating a really nice point of control here at 141.14. I'm looking a little bearish. I'm feeling a little bearish right here in the 30-year. We're smack dab between the pivot and the S1 right now, bouncing off the VWAP. And the VWAP has been a dominant player ever since approximately 1020 to 1030. So I'm going to think about this. And this might be a good overnight trade opportunity, by the way, if you're looking at a daily chart. Let's look at a daily chart just to cue something up, maybe. I'm going to be really conservative in this queue, and I would put the trade on, not now, but I'd wait for the open to put it on. And I'm going to, look at this. This is no wick on the top. It's kind of nice on Treasury bonds today. I'm just going to put my crosshairs here about the top of my rectangle here. Pretty good. And, we're pretty far south of that right now. So from a trade idea point of view, from a long-term trade idea point of view, I like the 38.2, around 140, 128, and then give yourself a stop out on top of the rectangle here. Again, that could be a long-term position trade or overnight trade at least. It just seems this triple top has run out of steam here. And I could probably extend, I'm going to have to adjust my rectangle according to my rules, but I'm just going to move it apart here to see if we close below my rectangle today or anytime soon. So that's what I'm thinking from that longer term point of view. Let's get the daily off of our screen right now. I think we covered all the major things I wanted to talk about today. We can go back to the stock index futures. Look at them one at a time. Who's with me today? Shout outs, Bob Lewis, Frank Williams, Bernadette Addison. Good to see you again. Tim Marco, Andrew Morris is here. Brian K. Anissa, by the way, thank you for that question in Bazinga, and thank you for being there for that. Hopefully that was fun. Anissa had a great question about the euro versus the Swiss dollar. I felt that the euro was going to be weaker in relationship to the Swiss dollar. Swiss are just pretty efficient. They don't like to mess around with their currency, central banks a lot. They did some surprise move a couple of weeks ago, but I don't have that currency pair up here right now. It would be called a minor. I don't think that's a major currency pair, but it's a currency pair you could probably trade. Here, you would probably trade the euro, kind of leg into a spread between the euro US and the Swiss US. If you wanted to actually participate in that cross and more of a liquid futures market. But thank you for that question, Nisa. Appreciate that. Dan is here. Elizabeth is here as well. Thanks, folks, for being here. Carlos, of course. If I missed your name, I apologize, but I appreciate you being here as well. Carlos says RTY aiming at 1756. All right, let's go over to RTY right now. Wow. Somebody is feeling a little grumpy today. RTY aiming at 1756. If it rallies back to 1823 to 1830, I'm sure. Pending PA. Let's go over here and take a look at the daily, though. Now, Carlos has me thinking. Let's first of all, let's call it 1756. That's approximately right about here, right below the long-term outside fib, 23.6%. Interesting area, though, that you chose, Carlos. I got to think about it a little bit more. If it relates to let's just call it 1825 just to make it easier on my mouse moving abilities. Right, we'd be making new highs on the day. Very interesting. I do have this nice area of resistance up here, which again is looking like it might hold for now. I don't know. We'll see. Wednesday is going to be the day for sure on the stock index futures. At least phase one of the move, right? Oh, by the way, Carlos, Tom wanted me to say he didn't see you in Cooperstown. That shows me where my mind is. Copper futures, Cooperstown, New York, for the Hall of Fame ceremony this weekend. He did make it. Tom did make it with his 3 kids, and had a great time. He didn't see you there, but he said there was lots of Red Sox fans. So I don't know. He just told me to tell you that. Oh my goodness. Anyway, Russell Futures is actually looking pretty normal distribution right now. Look at the volume profile. It's looking bell-shaped curve. We have a nice middle point here, right? The middle point is going to tell us where price happiness is. And we're right smack dab at price happiness, which is right by the VWAP here. At this point in the day, I see nothing to do in the Russell 2000. This is nice. And I'm also going to keep this level in mind for Wednesday morning, right? I want to see these points of controls move up and down and sideways and see where we land at 2 o'clock in 5 seconds. At 2 o'clock in 5 seconds, East Coast time on Wednesday. In any event, let's go back here. Let's go backward here. YM's looking weaker. Point of control is a lot higher on the YM, right? Although we do have an interesting bottom that's formed. Okay, so we have a bottom from the middle of the night. We have another attempt at another bottom, but this was a classic doji at 320 to 330. The European Open couldn't muster anything any lower, and then buyers came back in, and we kept on buying all morning long. So that, let me just kind of show you what that doji looks like. Again, very small or non-existent body is the definition of a doji, and a body is simply, the red or the green part of the candlestick, right? The difference between where the candle price opened up in that time frame and where it closed. And it's just color coded, right? In the old days, it was black and white instead of really fancy colors. But remember, in the old days, we didn't have colored printers either. So when the guys on the floor wanted to print out charts, it was black and white. Anyway, just give a little history lesson there. And then all of a sudden, we got color printers, and we're back with the green and the red. I lived through it. I lived through the era of non-color printers. It wasn't easy to do, but I did it. In any event, this is a really good candle, because not only did we attempt to penetrate below the first standard deviation bar, but then we just drove ourselves all the way back up over the pivot. I know that the range was kind of small. This first standard deviation pivot range was small, but then you just had continuation candle. And by this point in time right here, you had a confirmation candle at 4 o'clock to 4:10. And that confirmation candle said, hey, this doji was real. Buyers rejected this low level and decided to reverse it. It was a reversal doji. And then sure enough, by the fourth candle here, you had serious confirmation, because we went through, not only is it a big candle, but we went through the top standard deviation band as well on that move. And then we had a continuation buying all the way through as well. And the Dow finally reached a peak, slowed down. And now it looks like it's time to pay the piper. Looks like things were heading back all the way back down. Double, triple bottom here almost, when you kind of line up my crosshairs all the way down to this low around 791. And now we're having end of day buying coming back in here on the E-mini Dow. And so when I'm thinking about the point of control going into Wednesday, I'm going to remember this, 31,937 on the Dow. So looking weak, but now we're getting that retracement. I'm interested to see if we're going to get the 23% retracement or not. That is so often coveted by end-of-day traders. And yes, we do. We're at that 38% now. So I'll come back here for the Dow late in the day. Oh, it looks like Mom and Dad Cags joined us. Good to see you. Thanks for being here, of course. Mom and Dad, always good to see you with us today in the buyers closing events. A lot of buyers coming in. No wick right there. Would not sell that candle. Nuh-uh. What time is it? We got another. Well, let's wait 5 seconds. See what happens on the next candle. Out of curiosity. Time frame is closed. So 10-minute candles closed, 5-minute candles closed, and a 2-minute candle and a 1-minute candle are all closed. on that mark. Buyers continuation buying are coming in right now. We're driving to that pivot. Very interesting. Let's go to the Nasdaq. Nasdaq is holding its own. It knows my targets there. It's making fun of me right now. It's okay. It happens. So from a rectangle point of view, all right, so we have a lower high. We have a lower low. We don't have an outside bar though, but it is pretty dominant green candle here. Continuation buying so far, but we haven't, the high isn't, it's just getting close to this red candle here. It's almost to it. We're touching it right now. All right, finally we broke on through. Okay, so we broke on through that level. And again, we're going to see if we can get that first target. I know it's frustrating as all possibility that we're not getting it yet. We had the same phenomenon in the micro Nasdaq this morning, and patience eventually paid out, right? And I know your hair's on fire. Well, Jim, just go to market, get out, close your position, be happy. That's not how I look at it. I look at it, this is a game of patience. And a lot of times when you chase, it's a mistake, whether you're moving a stop away, where you're moving a target closer, or you're moving an entry idea closer. That's called chasing. And usually that's not the best of all possible ideas. By the way, something happened in the Bitcoin trade here. Looks like we got, it's no longer on my board. So it looks like it was successful because I believe it was a 10-unit contract. Let's just do this real quick. I'm going to right click and we're going to go to data series. We're going to turn on markers, apply. Okay. And there we have it. Yeah, we got it. We got it. And there's our little blue indicators down there as well. So all is well in the world with that particular trade idea. Done for the night there. Let's go back to NQ though. Let's kind of watch it and talk about the behavior that we're seeing right now. Our Rachel says gold, very interesting right now. Commercials, heavy buyers for the last few weeks. Large, small specs dumping. Seasonal pattern through August is bullish. Sentiment brutally low. I'm looking for an entry here. Okay, all right, that's a fair statement. That's a fair statement. I'm just looking at this trend on a daily. I'm much less sophisticated in my point of view here on gold, by the way, and the dollar index is a little bit wonky also today, so that's not helping. But I see that 23.6% holding in a lower high. We'll see if that means anything in the long run or if that's just kind of, let's wait till Wednesday. But that's a great observation, Rachel. Thank you for that point of view as well. Greatly appreciate that. All right, where are we at here? Let's see how close we got. Why was my target there in the first place? I ask myself all of these questions all of the time. Oh, that's right. I was trying to thread the needle here. And sure enough, look at where the needle was, right? I wanted to be higher than this previous peak and lower than that previous peak on that candle. Let's just see exactly the high tick. The high tick was 0575. We were 0625. Missed it by two ticks, right? Remember, the smallest increment in any market, right? The smallest increment of movement possible is called a tick. Just a little, I don't know why, but it is, right? This is traded in quarter points. This is the Nasdaq market. Each quarter point is one tick. There's 4 ticks to a point. And sometimes we call points handles, right? It's old fashioned, I know. Well, I'm old. So I'm trying to catch up, going way back in the Wayback Machine. Oh my goodness. In any event, we'll see if buyers get traction here or not at the end. The other thing that's going through my head is, hey, we have 2 units on. We got that in 45 seconds. We have that last 15-minute candle. I don't have a 15-minute chart up, but we're going to have a last 15-minute candle on other people's charts. And we'll see what the velocity goes either way. At this point in the day, though, since there's not a lot of time left, I'm going to move this stop up to break even plus a little bit, right? So worst case scenario is we tried and nothing happened. I'm giving myself a couple extra ticks here to give me a little bit of room because, again, this market order is going to behave. This is going to behave like a market order. This stopped, and I'm going to get slippage, right? And then I'm going to have exchange fees and commissions. So I want to kind of give myself a little bit of aiming to break even on the trade. You scratch it, we call it, right? We scratch the trade. It means that we bought it and sold it at the same price. That's also a little old-fashioned, but I want to include a little bit of commission and slippage in there as well. Let's see if we can scratch this trade. That's why I moved it up here. The second thing going in I'm going to put another order in here at the 23.6 just to throw it in. I don't expect us to get there in the next 15 minutes. And I'm just, we'll be lucky to get to the 306, but at least we could then trail stops if we do get that first unit. We could trail stops if we don't get that first unit. By the way, FYI, I'm not there yet in my mind. I'm mentally not there yet in my mind. I just want to come on. Let's pick us off. Let's get that one unit going. We're going to root for it a little bit. And I don't know, rooting might work. There we go. See that? Ye of little faith. I'm changing it to a one lot stop right now. So now we only have one unit left. And at this point, I think it's appropriate to go right below the low of the wick of the contemporary candle here. And if we get stopped out, there's a little extra meat on that second unit. And I could live with that. I could be happy with that. That 23.6 target seems a little far-fetched for me, but we've seen all sorts of stuff happen in the last couple of minutes of regular trading hours. We'll call it the last call period for futures. Even though we have another hour after this, we have closing time where we could do stuff. But remember, it's earnings season. I kind of want to stay out of, there could be some after hours surprises. I don't know what's on the calendar, to be honest with you. I didn't get that far. But in any event, we still have buyers kind of holding their own here. Let's just kind of cruise through some other markets here. Again, even the S&P hit that 23.6% retracement pretty nicely. Point of control also was hit pretty nicely, and that's where we're at right now. Again, I'm going to remember this point of control right around 39.50. It's easy for me to remember. I know it's 39.57, but I'm going to remember that coming into Wednesday at 2:00. And there are some competing points of control here, which makes it really ugly. There's one up here around 64. There's one a little bit higher here around 68. There's the top of the value area has got a lot of volume bulk in it. So I'm disappointed. I'm disappointed in volume profiles behavior today. I'm not going to hold it against. I'm going to be kind. We're going to keep looking at it, but it's not what I expected to see today. And we just see we have a decent sized range of volume. I'll call it the range of volume. Tom, we're trademarking that. What is the range of volume? Well, it's mostly the value area today, right? Because it's blocky. Anyway, buyers are still kind of pushing it up here. ES is only down 6 now. After all of that oscillation, we might end up unchanged on the day. So that's another interesting thing. Our Rachel, love your dog, Jim. Thank you for that. Did she walk by? Did you see her walk by? Sorry about that. Oh my God. She's been spending more time with me up here. She's a lady dog, right? She's an older lady dog. She's about 11 years old, German wire hair pointer. Still kind of a beast, though. It's always been a beast, but slowing down finally. Thank goodness. When they tell you, your pointer slows down after 6 years, don't believe them. Not true. But thank you for that comment. Appreciate that. Companies reporting earnings. All right, we're having some. We got Mission Control and Tom Schneider on the job here. We're going to get some more intel for you as we get through here. What time we got? We got 12 more minutes left, right? One more 10-minute bar before the final bell. Everything's kind of settling. Everything's settling back to where we started today. Let's take a look just kind of at the quote board here. 1.3 million, decent volume, not great, right? 1.5 to 1.8, great. 1.8 off the hook. Institutional folks are going crazy. We're not there. We're less than that. And I expect that, right? We're just anticipating Wednesday. The micro NASI is overtaken by the micro E-mini S&P today. That's different. We don't see that every day. 1.1 million, super volume there in the micros. Love it. Currency crosses are all strong against the dollar, except the Swissy, which is a little bit weaker, and the yen, which is a little bit weaker. I know it's counter to what I told Nisha earlier today, but I was thinking of a long-term prospect, not just an intraday prospect. Again, dollar index probably a little weaker today as well. Energies are all up, right? Again, we talked a little bit about this Gazprom situation with the tapering down on the flow. Again, reportedly that turbine is ready to be shipped now from Canada. I don't think it's going to make a difference. I think they're going to do what they're going to do. And as a result, Germany's got some work to do. So our hearts and prayers are with them for sure. Everyone down over there for sure. as we got summer, we got fall, but winter is just around the corner. You need to get prepared for winter. John Snow will tell you that. John Snow will make sure you need to get prepared for winter. After market today, Tom's got me at Whirlpool. We know what that is, Whirlpool, and then 49 others, 49 other companies reporting earnings. So be careful with that last hour. It might not, this last hour might not, behave normally, right? Just keep that in mind as we go forward here. Let's see, the Nasdaq is on the move and we might have to trail our stop again. But then again, we might not. We just got our second target. All's good in the world. Let's go ahead and cancel that stop. It's no longer necessary. And that's fun when you could say, that's fun. Say it out loud. Stop is no longer necessary. Just repeat that over and over again. You'll feel better after you're done saying it. I'm canceling it. And there we go. Nice 23.6% retracement in the Nasdaq. Overall, Nasdaq is still down. It still took it on the chin a little bit today. We'll take a look at the daily charts in a little bit. Tomorrow earnings before the open. I got some more facts for you folks. UPS, McDonald's, General Motors, General Electric, GM, 3M, McDonald's. Haven't been to a McDonald's in a while, to be honest with you. Raytheon and ADM all up on the block, plus 44 others tomorrow. And this is before the market opens. That's that third crosswind I'm talking about, right? Earnings, Fed, GDP number, all coming at us this week. Buyers are coming in though. Again, I wouldn't sell this at the end of the day. There's 9 minutes left. I probably would be, wow, look at the Dow. This is the comeback of the day. We're going to award the E-mini Dow futures comeback market. I don't know if I should say that. I got to look at all the asset classes, but I'm going to call it comeback market, comeback index of the day right here. Now, Russell could take the title. Let's see. Russell's trying to take the title right at the top of the VWAP band here. And Russell, is on pace to close positive on the day. Another 7.5 minutes left. Really interesting. But then again, I'm back to this whole idea that we're waiting around till Wednesday. We don't expect any kind of, crazy news to come out other than the earnings stuff. And, we know how the earnings games works, right? Who sets the bar for the earnings? Well, the company set the bar. And then, they meet their bar or they don't meet their bar. Well, a lot of times they set it a little low. I don't want to be a conspiracy nut, but I'm just saying it's better to be conservative than aggressive when there's all sorts of uncertainty sitting in front of you a quarter in advance, right? At least we get some forward guidance though, which is good, I guess. I think that's good. In any event, maybe we're going to stop at the top of the value area here on the Russell. Maybe we're done. Maybe we're not. 6 minutes left. We will see. Let's continue to go through the asset classes though. Gold down $10. Silver down 28 cents. Copper up a little bit. We'll take a look at a copper chart in a minute. Micro copper there, 2,275 contracts, something you could scale into, something you could use on kind of more of a conservative, you could enter on limit orders, exit on limit orders, I think is my point. When you have a market that's got 2,275 in it, just keep that in mind. So it's just, it's thinner, less liquidity, bid-ask spread's going to be bigger, but it's a micro. So you could trade around support and resistance levels a little bit better for sure. Let's see, we've got a question coming in from Olawashina. I'm positive I pronounced that wrong. And I apologize if I do. I'm going to call you Olu. Olu's easier. I'm going to call you Olu Washina. I love it. I like your name. Question: can you explain the purpose of marking these numbers for Wednesday? Yes. So the futures markets, I think he's talking about the point of control, right? Memorize it. And we're going to track the point of control today versus tomorrow versus Wednesday morning. And we're going to see where they all line up, right? And, a lot of times we end up kind of in the middle, right when we get to that Fed day. We're, in other words, maybe not a big trend outside of this regular point of control average, if you will, 3-day average, if you will. So why it's important to me, I think, is because I think we are a little bit in anticipatory mode, even though we're going to react to earnings. we are going to react to the earnings, because this is a big deal. This is a 75 basis point hike. It's a big deal. It has the potential, actually, 20 or 25%. We'll take a look at the Fed funds tool, potential of being a full percentage point, right? 100 basis points. Probably not likely. Probably the higher probability is going to occur, but that's a big deal, and it'll be interesting. It's very, when's the last time when's the last time it happened? I mean, remember when Paul Volcker jumped in here in 1979, he stopped targeting Fed funds rate, and he started targeting M1 money supply and let the Fed funds wander. And wander they did, if you recall that period of time. So it was a different operating policy back then, different operating procedure that was brand new at the Fed level. Now we're targeting the Fed funds range, right? In addition to the fact that we added this thing called QE, quantitative tightening, or quantitative easing on the other side. Quantitative tightening is the Fed just buying assets, right? Just buying assets, keeping interest rates down on the longer end curve of things, right? So it's a little different now than it was in any event. And now there was an Operation Twist way back in the 70s. Don't have to write it. I know it. But again, it was just that, that did start it off, for sure. Anyway, that's where we're at. We got, 3 minutes and 30 seconds left. Hopefully that answered your question, Olu. Thank you for that. Greatly appreciate that question, for sure. Now, we've seen Fed meetings where that wasn't the case, right? Where we trended like crazy Monday, Tuesday, Wednesday, either up or down, either way. And my whole average point of control theory was out the window, right? But a lot of times it's not the case. We're going to keep track of it. I don't know. We're actually trading now above on the Russell again. We've done it before, above the opening range. So Tom's 90-10 rule is in full force and effect on the Russell. Let's see where it is on the other ones. YM, well, we pretty much stayed range bound. We only had one minor close, brief close on the downside. So the 90-10 rule is not in effect really at this point, because we don't have a benchmark high or low to make it an effect. But buyers are coming in pretty strong here. Where are we at? YM's up 93. I'm laughing because I'm just amazed. This is a new paradigm, folks. We are treading new ground until things get a little bit more normalized. It's going to continue. Let's take a look at the micro Nasdaq. We're well past my rectangle. This rectangle has been completely penetrated. We're trading above it right now. 2 minutes left. I think we could hit the 38.2 at this rate. Very interesting. Matter of fact, the rectangle is no good anymore. I might have said triangle before. Apologize for that. NQ, where did I put my order? Well, you can see my markers here. I did some trades. I did a few different trades for sure. But here's an order to buy. It's a blue. Wait a sec. Let's start from the start. Sold one up here. This is earlier. Bought it back. Sold another one. Bought it back. Then really from this afternoon to trade point of view, we had one unit here at 296, a second unit here right at 279, right below the S1. And then we scaled out, as you remember, once here at 306, and then again at the bottom of the value area, the 23.6% level, around 322. Now, from a lessons learned point of view, Spy Katrine, I'm going to tell you this. Maybe we should have been more patient on the exit of the second unit, because we left a lot of room on the table. You shouldn't complain about winners, but you could take a look at them and say, hey, could they have been more of a winner after the fact? And that's what lessons learned is all about. And that's what we want to think about as this thing kind of marches back up again to the point of control where there's that 50% retracement right above the VWAP. It's all lining up. Really good area of interest right now. I'm just going to do something that I usually wouldn't do in this circumstance. And I'm going to draw an ellipse right there. How do you like that? Is a target. So thinking about it. I know Mondays it's like, all right, it's Monday, weekend's over. We got a lot of work to do. We do stuff like, believe it or not, we do stuff between, we do stuff after Bazinga and before this event. Me, Tom, Jason, Mark, and whoever else gets involved, and we do stuff being the organization that we are. So lessons learned, yeah, we probably could have been a little bit more aggressive on the entrance. Look at this, boom, we're closed right now And that's a really kind of nice move up. Just to recap, ES up, NQ only down 60 or so, RTY up, YM up, and regular trading hours are officially over. So we can take a deep breath and say, wow, all right, closing time. Be careful with the earnings things coming out, guys. You might see some price knee-jerk reactions. We'll leave the Nasdaq up since this is the most likely suspect for now. Thanks for the thumbs up on YouTube. Greatly, greatly appreciate that, folks. Appreciate the participation in the chat, helping each other out. Twitter.com/NinjaTrader. Follow us there. Send it over to your folks, your Twitter folks. Retweet, I think it's called. And then again, the more the merrier, right? The more interaction, the more people we have, the better and smarter we're going to get, because that's what we're trying to do here. We're trying to get better and smarter. Andrew says, thanks to me and Tom. You are welcome, Andrew. We love doing this as we speak. It's funny. I was talking to Dan Gramsay again, yesterday. We were talking about, he's a little older than me. Dan's, we found somebody older than me that does this kind of stuff. Dan's closer to 80, by the way. He's in his, I think, mid-70s is my guess. He's been doing this a lot longer than I have. And I asked him, how long are you going to keep doing this? He's like, I just love doing it. I'm not going to, why would I stop doing something I love to do? Just because I should retire? I'm not stopping. I feel the same way as Dan does. Oh my goodness. In any event, all right, let's talk about, I really want to focus here on a couple things. We'll end up with the daily charts. Let's look at the, what do I got here? FOMC ability calculator has changed at all. 75% is still pretty much where we've been tracking the last several sessions. We'll go over to the probabilities tab. The next meeting's kind of actually down. Well, it's close. It's a horse race. 45.1% that there's going to be we're going to boost up again another 50 basis points to a range of target range 275 to 300, and then similar 45% we're going to be between 300 and 25, and then really brave on the outlier here 10% we're going to be between 325 and 350, and that's what kind of all the high probabilities are tracking. Later on, that's where we're going to end up. I don't know. We'll find out. This seems to be an accelerated schedule. And if it happens, well, at least we have a plan. At least we have a footprint. We don't have this footprint so much in Europe. And when I say we do have, swaps that folks use to predict what ECB is going to do. We have swaps to predict what that the Fed's going to do also. But this Fed fund tool in combination with the members of the Fed, what they're saying out loud and what they're talking about jives a little better. So that's why I like it. Consistency is good. Market doesn't like uncertainty. This is kind of number one. I'm going to get rid of that. We're going to lower that. But Carlos wants to start a session trading the European hours. Oh my goodness. I'd have to stack up on Red Bull. I would have to stack up on Red Bull. Here's something really interesting. I just wanted to share. We have time. We could share. This is from Fred, right? This is the St. Louis Fed's. You can have, and there's so much data here. You can go crazy. But these guys are really good at tracking stuff for a long period of time, as you can see on the Fed funds effective rate. Remember, the Fed fund targets a range, right? It's not like, all right, it doesn't peg the exact number. It's a range. And then the New York desk kind of buys and sells securities to kind of, make that, it trades it to kind of keep it at within that target. And so you have an effective rate that's somewhere in the middle of the range. And you can see this really cool chart here where we're talking about, we see events, right? We see real life events, the embargo, the Arab oil embargo. And that's what they called it. They called it, I know you're not supposed to say Arab now, but the Arab oil embargo situation here. And, you might remember the Yom Kippur War in 73. We decided to side with the Israelis. So did some other places like Portugal and South Africa and some other places. And, so the Arabs, I'm going to call them, at least the cartel, turn the pipe off. So fine, you're not getting any crude oil. And remember, we had lines, rationing lines. I remember it. Jimmy Cagnina comes up, hey, you can't drive 55, or you have to drive 55. And then I don't know who came up with the song, I Can't Drive 55, but it was a classic off the bat. And then Ford, remember Gerald Ford? Well, he actually started the efficiency ratings for automobiles and targets and stuff back then. In any event, I'm sidetracking myself. I know. I just love reading about this stuff. And believe it or not, I was a young kid here, right? There was a time when I was a young kid. But anyway, so you could see these peaks and you could make of it what you want. The gray line is supposed to be recession, right? And we don't have a gray line yet. Now, if next Thursday, it says that we hit that minus number on GDP, and then technically 2 quarters in a row, negative GDP, we should start drawing a gray line. We'll see right now. But you can see there's a lot of upside here historically for the Fed funds target rate. There's a lot of upside here. So again, I'm not too worried overall. And, mortgage rates aren't always a 1-to-1 move. So don't freak out if you're trying to buy a house. It'll be okay, I hope. In any event, I think that was pretty handy here. Again, just Google the St. Louis Fed and you will get lost in data. And you'll be like, why did I do this? Finally, let's take a look at the calendar one more time. We got plenty of time in today's session to talk about it. Today is Monday. Happy Monday, by the way. We had the Fed numbers come in. I think that the Fed numbers are on your scroll. Fed numbers were probably a miss, as I recall. My actual was minus 0.19. This is the Chicago Fed National Activity Index. And remember, this is one of those indices that they oscillate around a zero line, pretty much, right? Zero means, that, it's positive for growth. Over zero, the higher, the more growth. Negative means contraction, or we're slowing down. And so actual was minus 0.9, just a little less than zero. Consensus was supposed to be over zero, 0.05, and then prior was 0.01. So that's the Fed, Chicago Fed. That was this morning. Didn't really move the needle. And actually it moves the needle the right way, right? We're kind of rooting for a recession a little bit to tame off this idea of inflation. There's still plenty of jobs. Folks can get jobs. There's a lot of vacancies. Dallas Fed then came in a little bit later with probably some data that was a little worse, right? Consensus was minus 12. Actual was minus 22.6. And then prior was minus 17.7. So that's trending negative also. Again, maybe a sigh of relief for the Fed. I don't know. Crop progress report, USDA, is at 4:00 East Coast time. Just came out. And then tonight, if you really can't sleep and you really need to kind of, get to sleep, you could pick up a copy of the Bank of Japan's minutes from its last central bank meeting. Those are going to be released at 7:50 p.m. East Coast time. So that was kind of interesting today. Tomorrow, we do have some stuff, though. Remember, I'm tracking this point of control every day to see where we end up. But we have, in addition to earnings, Case-Shiller, that's a green dot. We have consumer confidence. That's a red dot. Consumer confidence is important, as well as consumer sentiment. They're two different things, by the way. But when confidence levels and sentiment numbers are lower, companies' initial inclination is to do one of two things: is we're going to reduce the amount of product we sell, and we're going to raise the prices of them, or we're going to lay people off, right? Because they want to get ahead of the curve here. And if this potential confidence and potential sentiment is less, then they want to react to that on a forward curve, not after the fact. New home sales, red dot right there. Fed, Richmond Fed, probably not going to move the needle either. But there's a couple of red dot events tomorrow. We'll keep an eye on that. And then money supply again is at 1:00, but that shouldn't do anything much since it's pretty much all public information anyway. And then the main event, Wednesday, durable goods, boom, red dot. International trade in goods advanced, projection, red dot. And then some retail inventories, wholesale inventories. They only have a black dot, not a big deal. Pending home sales, 10:00. And then our EIA petroleum status report. It's probably going to be a very interesting report to see if we have another drawdown in our reserves in the petroleum status arena. And then boom, FOMC, 2:00. Equally as important as the press conference. Remember, 2:30, half hour later, they wheel out Chairman Powell and he goes up there, he reads a speech. That's all good. That's all fun and games when he reads a speech. That's okay. But they do allow Q&As. That's when things get a little sketchy. So I got to listen to that at 2:30 tomorrow afternoon. And then Thursday, GDP, we talked about jobless claims as well, but GDP is going to be the big zinger. on Thursday. In any event, that's looking forward. That's a forward look at the markets, folks. Really quickly, I want to look at the daily charts, and we're going to call it a day. We're going to say, hey, Monday was successful. We had a lot of fun today. We learned a lot of good lessons today, and we're going to be back at it tomorrow. Tomorrow morning. As a matter of fact, me and Tom are going to be back at it tomorrow morning at the opening range. So you get 2 for the price of 1. How do you like them apples? By the way, a lot of leverage, a lot of volatility, a lot of risk, a lot of opportunity, easy on the day trade margins. I want to remind everybody again, easy on the leverage, easy on the day trade margins. Be careful with that. Risk capital only, folks. Trade on a real-time simulated live NinjaTrader trading platform today. S&P 500 in closing, kind of a doji looking like thing, and maybe even an inside bar, right? So it's higher, again, higher high, higher low, higher low, higher low, higher low. And now we have a lower high inside bar today. Again, anticipatory, not surprising, right between the top of my rectangle and my dotted line here, which I could draw a rectangle if I want, but I just wanted to keep that kind of contemporary with the moving average, with the 50 period EMA. Just kind of look at those side by side as they go forward here. Again, anything could happen. We could break on up. We could break on down. The market is in anticipation mode. Nasdaq struggling a little bit. I'm going to draw a rectangle probably tonight, right where my crosshairs is at 580, area resistance. Again, and we'll be range bound between that and my line. Top of my triangle, that's a triangle, not a rectangle. Again, I have a nice rectangle here in the Russell. Range bound right now, 1, 2, 3, 4 days in a row. 4 sessions in a row, pretty solid range right now for the Russell. Again, we're waiting for a Wednesday. Same thing with the Dow, right in that sweet spot there, 4 days in a row, kind of range bound. Even though I had a little bit of a wick here a couple sessions ago, trying to kind of misbehave a little bit below that 50% retracement, but it changed its mind, which is good. Gold, wow, right against that 23.6. We'll see. Equal and opposite candle almost, not perfect, but almost. Again, the idea on equal and opposite is if you put these 2 candles together, you're going to get a doji, right? The opening price and the closing price are going to be around the same price. Here's the opening price, right? And here's the closing price of the next candle. You put those things together, this is going to be a perfect doji with most of the wick on top. So again, I feel like that's a little bit of a negative, right? The $1 million question is, are we going to have continuation selling? And we don't know until the next candle starts to form, right? We don't know. My guess is, though, this is looking kind of negative on the downside, at least for now. This area of support here is strong. It's solid, many days worth. And, that's 1693 to 1700 levels holding. I don't know. This is a rough market to trade, folks. Crude oil, the trend is down, but it's a wide trend. We're still barely below $100. And today we had a nice big wick here bouncing off the rectangle. Buyers came in and said, nope, we're staying above that 23.6%. We're not ready to break any lower. And I think that's true. So we can see some sideways channels developing here. That's another option in crude oil, by the way. Who knows? Gasoline prices, well, we had a nice trend down until today. We have some buyers coming back in, but that's okay. We've not to that 23.6% level yet. And gas at the pump is starting to cooperate a little bit. Nat gas, though, probably this is causing more duress than anything, to be honest. We're back in bull mode. All eyes on what's going on in Germany with the pipeline in Russia underneath the Baltic Sea over there. And hopefully we'll get those inventories up in Europe to be comfortable this weekend. And so we don't have rationing, equally as important, gas rationing at the manufacturing level. That's another thing that's a big worry there. I mean, again, we're talking about recession. We're talking about the euro losing a lot of value, making it a hard time. Basically, we'd be importing inflation at that point, and they'd be pulling in inflation. So, in any event, we'll keep an eye on this as we approach maybe new highs. I don't know. I would not be a seller in that gas right now. Bitcoin, it's turning around. Remember, I was wrong in my position trade. We hit that 38.2%. Really nice technical move here. And now we're back at 23%. I don't know. I'm going to be open-minded in Bitcoin, but I'm feeling like we should be a little bit negative here. Got a couple minutes left here. Real quickly, I just want to share a couple more markets before we wrap it up. I appreciate your patience with me going on. And we got a poll I want to talk about too. So we're going to go a minute or two over. Sorry, Mission Control. A, B, C, D. We're moving back up here. Double top's been kind of breached pretty much, but today it changed its mind. So we'll keep an eye on Treasury bonds as well. Again, wouldn't mind trying to get short Treasury bonds somewhere in this rectangle from the middle on up. just kind of an overnight trade idea. Lastly, Euro holding its own right here at 38.2, looking for places to sell, particularly after Wednesday and maybe after Thursday. We'll see what that GDP number comes in. Olu says, what time do you wake up to prepare for the markets? Also, how much is a tick on one contract in the mini Nasdaq and the mini market? I'll take the second one first. Well, the mini Nasdaq tick is 1/10, right? So in the mini Nasdaq 1/10 it's also 1/10 on the mini ES. So mini ES would be $1.25. And remember, these are in points, right? So it's going to be $5 instead of $50. And in the Nasdaq, it's going to be $20 for a point, $2 instead of $20. And then you break it up into quarters. So $5. So that's how it works. It's 1/10 the size of the classic. And then what time do I wake up? I get up early, but I go to bed early. So don't use me as a judge. I like to kind of turn on Bloomberg, look at the charts, read what happened to Europe overnight, I recommend this, by the way, the online version of the Wall Street Journal. You could read it on your phone, and articles, even you could listen to them, right? You could hit the listen button and they read the articles to you, and they do a lot of work early in the morning, right? So, pretty much by the time I'm on the treadmill, if it's 6 o'clock in the morning, I'm listening to the Wall Street Journal as I'm walking or running, jogging, mostly walking fast, as far as I can tell. I don't know. You'd have to ask Mrs. Kaggs if I'm moving fast enough for it to count. But in any event, that's what I do. Everyone's different. But, there's news, there's planned events you should be aware of, and then there's unplanned things you're not aware of, right? So at least 2 out of the 3 we can cover early in the morning as we prepare for these events. All right, poll question. We've been having a series of polls developed by masterminds here at NinjaTrader. I'm going to read this one. What feature about volume profile do you like best? ? Value area extremes, 31%. Interesting. And remember, value area is 1 standard deviation worth of volume. It's that dark blue shaded area in the middle. Point of control, 24%, 1/4. I'm a fan of the point of control. Gaps between volume clusters. So now I call them market weakness, but gap between volume clusters, that's brilliant. Brilliant. 8% are like that feature the best. And that's a good feature to like, right? These gaps sometimes get filled up and sometimes they don't. And, just add a little momentum to the equation, and maybe you'll have some good areas of interest develop on your trade ideas. 35% says haven't used volume profile yet. Well, we're going to try to get you to convert and consider using it going forward. In any event, wow, we did a lot of work today, guys. Thank you so much for being here. Guys and gals, folks, people, human beings, fellow human beings, thanks for being here. Had a good time today as well. See you tomorrow at the opening range. And please remember, be safe out there and be good to each other. Thanks for coming.